what does this all mean for the market? Here, I just pulled out the United States Commodity Index, which looks like a massive bot for me. So this looks quite bullish in my eyes. And I think one of my theories or opinions is that we will see a quite strong commodity market over the next month, maybe also years, because the index here looks very, very bullish. And I could imagine that it will go up. That, on the other hand, will mean probably that also inflation will go up. And to fight inflation, I mean, what did the central banks do? The central banks, they raised the rates and the dollar got stronger. That is my thesis. That covers also, I think, your opinion, Brian, that you think that the economy will get strong and the dollar will get strong. I think this will all go hand in hand. And actually, one reason could be that we will have a massive need of energy, and everything what has to do with energy and also commodities because of the technological development we have. Because like many of the metals, for example, like silver is used, or platinum is also used in like solar plates or electric vehicles, so on and so forth, and general electric stuff we have these days. There is a big need, and to produce these metals, we need energy. And also, on the other hand, maybe you heard it already, how much energy this AI stuff needs compared to our normal technology is also immense. So,
Yeah. If you want to do yourself a favor,
yeah.
pull up Newmont Mining from the 1980s. And I think that'll give you an idea of what's coming here in the metals markets.
Can you see
This
my
is
chart?
Newmont. The symbol is just NEM. You can see, I mean, that's an inverted head and shoulders. I mean, that damn thing's moving up here now.
Yeah.
But zoom back to the 1980s. That, I think, is what our future is.
Oh,
You can see, yeah, into 87. I mean, things went just a little bit insane.
why was that, Brian?
Well, this is Mr. Reagan came to Washington originally wanting to be sort of a deficit hawk and balance budgets. The banksters, of course, tried to assassinate him. And literally the day after that event happened, he changed his whole tune and he was like, all right, fine, let's go spend money like drunken horse. And that actually was the beginning of this deficit world that we live in. And at the time, Mr. Reagan specifically said that he wanted a 300 ship US Navy, which basically was declaring war on the Soviet Union. You know, the money printing, which is the cause of inflation, that's already happened. That's past tense. I would actually make the argument that the metals are the last commodity to move, and they are sort of like your repricing event. You know, they already took lumber up, they took wheat up, and the grains, just one by one by one. Cocoa ran here. They're all just repricing all of these commodities. And gold usually is the last one, the metals, right? Because it goes cost push, demand pull. And I think also too, the biggest sort of inflationary component in the equation is wage inflation and the public demanding higher wages to offset the inflationary pressure. And so I think that's coming. So you've got, you know, the US military industrial complex just rocking it. We've got, you know, all the, you know, we were just talking and you were saying there a second ago, you know, is it electric vehicles that drives massive amount of demand for commodities? You know, is it the, you know, like one image we should look at, maybe you might be interested in, is the gold silver ratio and how that seems to be trending in silver's favor of late. So as a result, that is basically a bullish vote on the economy. So we're getting a lot of anecdotal information that, yeah, so if that is emming out and trending down, then that means that the economy is actually pretty strong, and industrial demand for industrial metals is outstripping sort of the demand for gold. And the, oh, we're all going to go to hell in a handbasket, bury your head in the sand, kind of buy gold and, you know, and sort of expect the end of the world kind of thing. So that chart, as long as it keeps making lower highs and lower lows, that chart is telling you that the economy is actually pretty strong. So when was the last time Trump was elected? Do you remember?
2016 to
Yeah, November.
20, I think, right?
And pull up on that copper chart. What did copper prices do the day after the election?
So was it November again?
Yep. Look
Yeah.
at what happened.
Ooh.
So my hunch is that the market's going to do exactly the same thing. We probably consolidate for the next few months. Trump's elected. Trump is pro-business. I wouldn't be surprised if we just consolidate here over the next few months. And Trump's elected, and all fucking hell breaks loose in this thing.
Yeah, definitely. Trump would be a
Definitely be pro-business. Now, this is an interesting thing. Think about this. And actually, what would be interesting to get a chart of the metals and then overlay it with a chart of the energies. Because what has Trump said about energy?
I don't know. I think a friend told me Trump said, drill, baby, drill. So he wants to drill so much.
That's right. You got it. You said it perfectly.
Yeah.
The line exactly. What does that mean? What does that imply?
That would not be good for oil, I think, because if we have a higher supply in oil, then that would mean that the price should go down, doesn't it?
Right.
Normally, you say if gold goes up, oil goes down, and vice versa.
Exactly. Wow, Jesus, you know all my lines. Way to go. So the point being that you have sat here and you've told us that you think that the metals markets look bullish. We've gone through a number of charts, and it looks to me like the metals look like they want to go up. And it looks to me like things like silver might even outperform as the economy is relatively strong, and copper will outperform, right? And what is one of the ways to enable that is we got to actually get energy prices trending back down. And the easiest way for energy prices to top and start working down is if Mr. Trump is elected. Number one, he's going to say, get out there in the Dakotas and start drilling like a son of a bitch, right? And bring that product to market. There's going to be a lot of companies that are going to do really, really well. What would be really interesting to see is what are the energy companies that are the heaviest political donors to Donald Trump. Those are probably going to be the companies that do really well.
The orange line here is representing the stock market, which you see here at the top. And I just marked based on their relative strength here in the relative rotation graph, how each sector is doing. And so if I mark them by their colors and how they perform, you see that the technology sector, utilities, and real estate a little bit, and communication services are a little bit stronger than all the other ones. And normally at a market top, these other ones in the middle should be strong. And at a bear market or market bottom, you see that these sectors should be strong. Technology, communication, you see it here on the sine wave. And so that is one indication that we are currently technically, based on the sector strength, that we are at a market bottom or in a slow bear market. I also look at the macro data, which is the consumer confidence, industry production, 5-year treasury yield, and the yield curve. And if I summarize this, what you see here on the table at the bottom, where we are currently. So this was June, a picture from June, where everything looked a little bit different. But now we are in July, and you see that we also switched here to this side based on the macro data that we are also on an early recession technically. So what this says to me is also what Brian said before, we are probably in a bear market at new all-time highs. And that is something what I find really interesting. And that just indicates for me that we are probably just building a bottom to get much, much higher.